Happy Friday, everyone. It's 8:02 a.m. Chicago time on Friday, the 29th of April, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall sentiment in the market today is continuing to be bearish from yesterday, a continuation of what we saw into in the afternoon, the big drop yesterday. It's not clear what led that drop, but it looks like Carl Icahn has something to do with it. But it doesn't matter to us day traders. We're not in Apple, and maybe you are, but overall, we're just looking at what the market is pricing in and how much volume it's pricing in as it's doing it. On the overnight, um, the U.S. Employment Cost Index came in line. Personal income came in at stronger at 0.4 versus 0.3. Personal spending came in weaker at 0.1 versus 0.2. PCE core came in 0.1 in line. PCE deflator 0.1 in line. And we had ExxonMobil report 43 cents versus 31 cents, a big blowout earnings release for the first quarter. Revenues came in at 48.7 billion versus 48.1 on this ginormous company, and that's how things are shaping up. The market is currently pushing lows in the overnight session. Overall, the overnight news flow was not that busy. Europe's back in deflation. It shows that the Euro area inflation fell 0.2% in April, 0.2%. The number was expected to fall 0.1. It's a drop from March's 0.0. Anything below zero is considered deflationary. And then also China's yuan fixing saw its biggest move since 2005. The People's Bank of China set the midpoint of its yuan trading band at 6.4589 yuan per dollar. This is the biggest adjustment that's been made since 2005. The Japanese yen keeps getting stronger. The currency briefly strengthened to better than 107 yen per dollar, which it has not done so since October of 2014. So there's some pretty fundamental macro type stuff going on, and I'm sure that you've been aware of it. Let's take a quick look at what was expected yesterday. Yesterday's expectation was yesterday's expectation, as we look at this here, for a primary hypothesis, this is from yesterday's video, is an open in a range in value, expected an open auction in range, and overall expected it to kind of sit sideways on the open because we're opening in range inside of this big balance. The overall expectation was also to push lower, but the primary hypothesis is higher and looking for a push towards 91. That 91 area, that's the primary idea. The secondary idea for the day on the ES is an attempt higher right here, and then overall a drop and to finally get to this 61 and a quarter. And as I stated yesterday, this is the better trade for day traders. This is the better short-term trade. So overall, yesterday, what we got is both. The open was actually a lot stronger than what was expected. It was not an open auction. The open was an open drive. I'll switch us back to 15 minutes and look at the overall action here. So if we go back to the open, I'm sorry, it wasn't an open drive. That was I'm confusing yesterday with the day before. So we did get an open auction yesterday, just as expected. We tested lower first, and then we ended up pushing higher. Hypo 1 was in full play. We ended up taking back the entire auction from Wednesday. Wednesday's auction pushed to 94, which is 3 ticks above that 93 quarter main target. Yesterday, it went a tick through that main target above at 93 and a quarter. Remember, the main target was the upper high volume node. I'll show you that in a minute. And then as the day wore on, towards 1 o'clock Central, the ES failed through the mid. This is a setup right here, going with the trend. We had to push to the main target, so this setup has a slightly lower probability or higher risk that we need to pay attention to. But overall, this looked like it was going to continue higher, and then the market just absolutely just exploded downwards. Uh, and the key figure yesterday that we needed to pay attention to got a few bounces right here. If you see the line, it says weekly low and one-time framing pivot from last week. One-time framing has been taking place, as I covered on Monday. One-time framing has been taking place for several weeks now. We've been one-time framing up, meaning we're putting in higher lows on a weekly basis in the day session, in the pit session. Everything I'm talking about here is in the pit session, except when I'm discussing the overnight chart. And this this level here is really important to hold the one-time framing up on the intermediate time frame. And what it did yesterday is it pushed to 65.50, just one tick, missed it by one tick, had a bounce up to 72.75, which is right against this consolidation zone here. This set us up for a short here, and then it came back down and it stopped right at it. So 65 and a quarter gave us a double bottom on a weekly basis. This is the low of last week, so now we have a double bottom on a weekly basis. Technically a weaker low now on a bigger time frame, and we ended up closing higher and continued higher as strong earnings came out of Amazon and others. So overall, it left us with this very clear double bottom against the one-time framing pivot point at 65 and a quarter, and the expectation then overnight was for it to attempt higher and then drop down, and it actually did that. It didn't look so good. It didn't look like it was going to do that by the time I'd come in this morning, but it actually completed that just now. So in the overnight, it pushed a little bit higher here in the overnight session, and it finally pushed through that 65 and a quarter just now, just 15 minutes ago, and has extended this low down, which is what's expected. Yesterday's action is what is known as neutral extreme, and what that means is the market has made an effort to push higher and has extended the session higher. So we are done with the first hour of trading, which is the most active hour of the day historically. We marked the high and low of that first hour. We'll call that the initial balance. We expect that the good part, a major part of the higher time frame or OTF participation to be done in that first hour, and that's why it's called the initial balance. So we took that out. We extended the range up, looked good, pulled back to the mid, and the expectation is another attempt at that 93 and a quarter. What it ended up doing is it ended up breaking and just dropping hard here. Again, the news on Carl Icahn came in at across my news feed at about 1:01 or so p.m. And then right after that, we see a big drop. I looked at Apple, and it experienced the same drop, but I don't know if it's experiencing the same drop in sympathy with the rest of the indices. This is Apple right here, and you can see that it took a hit as well. It moved from 97 plus all the way down to 94, and pretty good delta there. So it doesn't matter to me what the reason is. It's not like I'm going to go analyze Apple and see what the reaction will be from them. I'm just looking at the profile here. That's all I'm interested in. And we see that the delta was very strong on the sell side. Volume on that bar, on the first sell bar, was twice as heavy as the average. This tells us that the move is not only meaningful in price, it's meaningful in volume. We end up with a very large LVN zone in here, that an area that didn't auction both ways. We didn't retest this area. We never made it back to the mid. We ended up closing in the lower third of the profile. Usually we look for the lower quartile for a neutral extreme, but we did shift the point of control down. A lot of volume went off at the low here, and we shifted the point of control down to 70 and a quarter. 70 and a quarter being closer to the extreme, so we call this a neutral extreme. Generally, we see a neutral extreme at an inflection point near highs or lows, and they generally represent a turning point. A perfect example of a neutral extreme working out as it's supposed to is right here. You've got this trend down, and we open up, we test, we extend the range down, and then we end up finishing by extending the range up above the IB and closing their highs with a high volume node. This is a neutral extreme day. That was this past Monday, and that marked the change in trend from down to up, and this has basically reversed that. The day yesterday basically traversed or cross the entire almost the entire balance zone. I'm going to extend this balance zone out to see where we are. I'm going to be paying attention, and I'm looking to be an aggressive short in the 76 area. The 76, 77 area represents a key area to test a short right here. This area right here, if the market happens to pop up. Otherwise, what we have beneath us is this gap zone. The gap zone comes to us from the 13th of April. The gap zone mid is 61 and a quarter. 61 and a quarter also happens to be the composite point of control. That means since the 9th of December of October 2013 till now, if we take all of the volume that's happened so far, the most traded price is 61 and a quarter, which happens to be the mid of the gap zone. The overnight low has pushed through the gap zone by about 2 ticks and is holding right on the edge of the gap zone, giving us a very precarious area for the market to open right now. Again, we are likely to take out this weekly low, which ends the one-time framing up. We are likely to test the gap zone today. We are likely to be in the composite point of control, and so we have to look beneath us here to see what the next areas are. The next key area down here is 51 and a quarter, with 40-50 being the big retest area. This is the next big balance point of control area right down here. You can see that there's high volume down here. So if we break through this gap zone and start moving into this range here, then 40 and a half becomes our key target. So what does that mean to you and me? Overnight, to take into account the overnight session. Overnight, the volume was pretty decent, 278,000. It was completely balanced until just now. It was completely balanced against the prior day's point of control. There was nothing new to price in the Asian session, and we are just breaking lower now ahead of the open. The expectation is that we are likely to get some responsive buying, a little bit of responsive buying out of that gap zone before we open. I don't expect this to continue lower here in the next 13 minutes, but we'll see. And again, it puts us in a very precarious opening position for today. It's the area that we're in is really difficult to do anything with. So it's really if the auction continues as it normally does. Let me turn down my news feed. If the auction continues as it normally does, the expectation under a normal auction is for an open auction out of range in here, responsive buying towards the 2070 and a quarter, and I expect it to kind of get locked up on the sell side just above there if it manages to get up there, and then I expect it to roll over and start attacking that 61 and a quarter and potentially through into the prior microcomposite range down to our first target, which would be the 56, 55 and a quarter. That would be hypo 1. I'm going to be very, very keenly watching for liquidity on the offer. I'm going to be very keenly watching for an opportunity to sell short. Again, yesterday's move is very, very meaningful. However, we've seen this market have a day like yesterday and then come back and just absolutely take all of it back and resume its auction. We've seen that as well. So don't get stubborn if you get short. You know, it's just, again, I'm not going to rant again about taking losses. I did that yesterday in that Trade Wisdom segment. I strongly suggest you listen to it if you're having trouble taking your losses. But overall, I'm looking for this to be the line of defense for the shorts and for it to now start shifting down and repairing some of the structure below and building a better base for buyers to take it again to continue the move higher. The secondary hypothesis is that we make an attempt lower on the open, get into this gap zone, and then start to push higher. And then the target would be the 76 area again. That would be hypo 2. Hypo 3 and 4 is push up, chop around, attempt lower, and then push higher with strength as the buyers step back in. And then hypo 4 is the opposite: push lower, chop around, and then make an attempt higher, and then push down just like it did for hypo 2. So I know that's probably very confusing to you, but this morning the key thing to remember is just sit tight. Let the Titans fight it out and then go with the side that shows strength. I'm looking for the market to confirm hypo 1 before I step in. And I'm really keen to get on the short side in the in between the 73, 76 area being ideal, 75, 50, 76 as we push into that lower high volume node on the composite. If I lost you in any of this, just go back to YouTube, listen to the recording. There's a lot that's being covered here. Good luck today. It is Friday. Do not let the market put a hole in your account into the weekend. If you see that there's a lot of volatility, but you're not seeing your edge very clearly, just step aside. Step aside. Let the market do its thing. Let those who want to trade the noise trade the noise. Only activate. Only put your trades out there and only put your money on the line when you see some clarity, okay? And the definition of clarity depends on your trading plan. Good luck, and I'll catch you on Monday. Take care.